OpenAI. You hear that name and you immediately think of the AI revolution, right? But as it gets ready for what could be a truly historic IPO, there's a fascinating story unfolding. It's the story of how a nonprofit built for humanity transformed into a corporate giant. And in that transformation, it's created risks so huge they could actually threaten the entire global stock market. So, how on earth did we get here?
I know what you're thinking. That sounds like a bit of an exaggeration, doesn't it? How could just one company going public put everyone's investments at risk? Well, it's a question that financial experts are starting to ask, and they're not joking. The answer really starts with a number that is, well, it's hard to even wrap your head around. $730 billion. That's the value that private investors have put on OpenAI. Now, to put that into perspective, that's more than household names like JP Morgan or ExxonMobil. And remember, that's its value before you or I even get a chance to buy a single share. But this was never the plan. In fact, the original idea was the complete opposite of all this. Yeah, to really understand what's at stake here, you have to go back to the beginning. See, OpenAI didn't start with dreams of Wall Street riches. It started with a really noble mission.
This was it. This was the founding principle. It was meant to be a research lab, not some mega corporation. The whole point was to build artificial intelligence for everyone. But, even the noblest goals have a price tag. And in the world of AI, that price is just astronomical. It turns out, building the future is incredibly expensive. The amount of raw computing power it takes to train a model like ChatGPT costs billions upon billions. And that cost forced a total pivot from a nonprofit ideal to a for-profit machine, really just to keep the lights on and the GPUs humming. And this is where things get kind of weird. It's a paradox. If you look at the cost for a single AI task, what the industry calls a token, that cost is actually going down, is getting cheaper. But then you look at the right side, and OpenAI's total spending is just exploding upwards. So how can both of those things be true at the same time? Well, the math is just brutal. The best way to think about it is like this. Imagine the price of a single drop of water is falling, but all of a sudden you're being asked to fill an entire ocean. The use of these AI tokens grew 38 times in just 1 year. That completely erased any savings they were getting. The result? A company that is burning through billions of dollars a month with no real profit in sight. So, you've got to be asking, why would anybody invest in a company that's losing money on this kind of scale? Well, it's because the investors, we're talking tech giants like Microsoft, they're not betting on profits today. They're playing a long game, betting on a strategy that has basically defined the entire modern internet. It really boils down to this classic 3-step tech playbook. Step 1, get millions and millions of users hooked on a product that completely changes the game. Step 2, become so critical to their lives that leaving is almost unthinkable. You become the default. And then step 3, that's where the money comes in. Once you own the market, you can start to, turn the screws a bit, raise prices, get rid of the free stuff, and monetize that audience you've captured. But there is another bet happening here, a much wilder one. You could call it the lottery ticket. It's the small chance that OpenAI is the one that actually creates the world's first true superintelligence. The odds are pretty long, but if they pull it off, the payoff could be in the trillions. And that's the kind of bet that makes all this risk seem worth it. Or at least it used to. Because lately, the very foundation of this whole strategy has started to show some pretty serious cracks. For that tech playbook to actually work, a company needs 2 things: a loyal user base and a clear technological advantage. But for OpenAI, a series of ethical missteps and growing competition are starting to wear away at both of those pillars. For a lot of people, a real turning point was the company's decision on military contracts. Its biggest rival, a company called Anthropic, drew a clear line in the sand. They refused to work on things like autonomous weapons. Just hours later, OpenAI quietly deleted the part of its usage policy that banned military applications, which paved the way for a partnership with the Pentagon. And here's the real-world business impact of that choice. It showed that users aren't locked in. When a company does something that crosses an ethical line for people, they will leave. And that directly attacks step 2 of the playbook, the part about dominance. Competitors are jumping all over this, making it super easy to switch between AI models. And that's turning what was once a unique, special product into just another interchangeable commodity. And it's not just the users who are leaving. We're seeing key researchers. The very people who built this technology leaving to join competitors or even start their own companies. And every single time one of them walks out that door, the secret sauce that made OpenAI special gets a little more spread out across the rest of the industry. Which brings us right back to that central risk we talked about. Because even with all these problems piling up, that massive valuation is still there. And if OpenAI tries to go public anywhere near that number, well, the basic physics of finance tell us it could set off a market-wide shockwave. Just take a look at this comparison. When Facebook went public, it was a record-shattering event. It raised what would be about $22 billion today. A conservative IPO for OpenAI, where they only sell off 5% of the company, would aim to raise almost double that. We have just never seen an IPO on this kind of scale before.
Right, so that $40 billion, it has to come from somewhere. The big fear is that the market just can't soak up that much new stock all at once, especially with other giants like SpaceX getting ready to go public too. That huge demand for cash could literally suck investment away from thousands of other companies.
And here's how this could directly hit your 401k. Those massive index funds that make up the core of most people's retirement accounts, they are required by their own rules to buy shares in the market's biggest companies. So if OpenAI debuts as a top 10 company, these funds will be forced to sell billions of dollars of their Apple, Amazon, and Google stock just to make room. That creates a wave of forced selling that ripples across the entire market. So this leaves us staring at two very extreme possibilities, and both of them are loaded with risk. In one future, the big bet pays off. The technology completely remakes the world, but in the process, it displaces a huge part of the human workforce. In the other future, the hype bubble bursts, the company collapses, and it triggers a market correction that could wipe out trillions of dollars in value for everyday people like us. And all of this leaves us with one last really crucial question. It seems like whether this massive gamble succeeds or if it fails, the risk falls on the public, either as workers who might lose their jobs or as investors who might see their savings take a hit. When a technology's whole promise is to make human labor obsolete, you really have to ask who's actually benefiting and who's the one stuck paying the price.